Hello, friends, and welcome to Sanjiv Gupta Show. So, Sanjiv ji, thank you so much for joining us again today, one day before the inauguration day. The
One day before dinner. Yeah.
the US is about to change forever again.
Right.
You know
But
what's
for good,
for
for good.
good. Well, what's hilarious to me, Sanjeev ji, was that there's a message coming out from a Biden campaign all the time that he's going to unite the United States. But how do you unite a country that is split right halfway? Literally
Right,
50-50. And
right,
how do you
right,
unite
right.
people, especially the other side, who are willing to do anything to prove their point? You know.
Yes, and like you rightly said, the country is divided into a lot of areas. So even the Senate is divided 50-50. With the vote, vice presidential vote only deciding the factor. But again, this country is totally divided now.
So this will be interesting 4 years. Once again, I think it's is it fair to say that tax policy is going to change again?
Oh, definitely, only 1%. You see that you must be seeing. We spent about $4 trillion last year alone. Now, President-elect Biden, who's going to become president, I will just address him as president. So, President Biden is the tax plan is going to be like he already said what he wants to do. We can discuss about that. But before he took over the oath, which is going to go tomorrow, he's going to take that oath. He said that he's looking at $1.9 trillion again pumping in the economy, sending about $1,400 paycheck in addition to $600 paycheck stimulus check that people have received. He wants to send another $1,400 check. So he's looking at a lot of increase. That is tremendous increase in the state like Federal Reserve, like in the payment from the federal, and it will increase the total debt of the country substantially. And if you see the inflation is also going up. It's not going down. The dollar has depreciated over by 14 to 15% since last year. So the buying capacity of the individual is going down. We can see that. And so in what is looking at, and the real estate is going up, and the interest rate is going down. It's maintaining at the same rate. And Federal Reserve has already promised that it was going to keep the same interest rate for a couple of years. Janet Yellen, who is going to be the Treasury Secretary, uh, and the Federal Reserve Secretary, Chairman. So we know what Janet Yellen is a uh, very good person, knowledgeable person, but again, she's very instrumental in giving up more stimulus package, and she already said she's looking at giving more stimulus, big COVID-19 relief package. So all this is like pumping money, it's like government printing money, and this will, of course, have some inflationary effect. And this will be seen in the tax policy, which will come not this year, because to change anything in taxes, you need support from the Senate, which is not easy because you need 60 votes from the Senate. Uh, 50-50 is divided, but 60 votes, if 10 more votes from Republicans will be a big thing, big task uh, the for Democrat to take this. But what can happen is with the budget appropriation, what they can always play around with the tax policy with the budget at the budget time, and they can always try to increase that tax rate. So we know that the Biden tax policy is looking at increasing the tax rate from 37% to 39.6%. So that's 2.6% is substantial increase. But for corporate tax rate, is looking at increasing the tax rate from 21% to 28%. Earlier it was 35%. He's taking middle part of the 7%. But the bigger part is the long-term capital gains. He wants to make it to ordinary tax rate for people making more than $1 million. Of course, people making more than 1 million is very limited, so the impact might not be much. But definitely, the 39.6% is definitely a big drain on the resources of the individual, and the corporate rates will be also affected. And also, he talked about levying taxes on inheritances, which we know right now you don't have to pay on inheritance tax on the increase in value of the estate once you take those estate after that. So of course we can see this 4 years will be like first 2 years will be more throwing money in the economy, trying to revive the economy, trying to give money to the low income families and child tax. And again, child tax credit is going. He wants to increase it from $2,000 to $4,000 per kid. So they trying to pump up those low income families. That's what the Democrats believe in. So and next 2 years, first 2 years will be all about giving money in the economy and trying to maintain it, and last 2 years will be you can see an increase in the tax rate, and 2022 or 23 substantial increase.
So Sanjeevji, so we will see how this whole plays out in next couple of years with Biden. Who knows? Maybe he will make true on some of these tax increases, and maybe he won't. Maybe he will let it go. We'll see. But like you correctly said, I think people should not expect anything immediately this year, right?
No, it is definitely nothing will come this year.
Correct. So
Increase in taxes, of course.
yeah, and what about all the prior policies put in place by Trump administration? They will continue this year as well.
That's a $1 million question, whether he wants to cut down the Tax Cuts and Jobs Act relating to provisions relating to qualified business income deduction for business owners, some benefits in terms of 179 QBI reduction, 179 bonus depreciation for business owners, and also qualified leasehold improvements deductions, which was earlier taken, which was allowed for 39 years earlier. Now they take it to 15 years, and you can take bonus depreciation plus net operating losses. So there's a lot of things which were there, which were benefiting the business owners. I don't think he will do it immediately for this year at least, because he just took over as president. He does not want to uh, uh, doesn't want to throw something which can affect the business environment. As his promise is to keep whatever is going and to revive the economy. So I don't think that will be his focus this year. But like I said, a couple of years maybe later, you can see a lot of things changing.
So what we do know what's happening right now is those of you guys who are new to this is payroll protection program in back in action. So those of you guys who didn't apply for it the first time, it is once again open for you to apply the second time. And some of you guys who did apply and got the funds, it is still open for you to apply the second time. Now we do have a detailed video about that. Sanjeev ji discussed that in detail last time, so I would not ask him to repeat all those informations. But Sanjeev ji, what I do want to find out from you is this is like a fast moving train ever since they launched it. So what has changed since the last time we talked about this PPP loan?
See, every week we promise that new things will come. Why you promising? Because it happens. It's going to happen. We are seeing a lot of things, detailed instruction coming from SBA every week. So from last week till this week, the new things that have come out is the documentation requirement for for showing the reduction in gross income. We know that for getting a PPP loan, the most important qualifying thing is you should show a drop in revenue by at least 25% in any one quarter of 2020, corresponding to relevant quarter of 2019. So if you have a reduction in revenue by more than 25% in that quarter, let's say in quarter two of 2020, as compared to quarter two of 2019, then you are qualified to apply for a loan. Now, a lot of people have this confusion. How do you determine the gross receipt? We talked about earlier that is based upon the gross income, gross fees, but then they come out with documentation support. What documentation you need to prove that this gross receipt is reduced. So what they said is documentation is very important concept here. So the important things will be the financial statement, quarterly financial statement that you need to submit with your application. This quarterly financial statement will relate to the quarter, which shows the decline in the revenue by more than 25%. So if you have an audited quarterly financial statement, you're well good. If it's not audited, then you have to highlight on the income statement, which are the gross receipt. So if you're not doing in Excel, you're doing in QuickBooks. It's very easy because it shows the gross receipt, the component of gross receipt, and the percentage variance. So it's good there. But if you're doing in Excel, you have to list out what are the income levels and which line you have to highlight, which constitutes gross income and the percentage of reduction in gross income. So that's one area of documentation. Second area is they are looking for quarterly or monthly bank statement, and in the quarterly or monthly bank statement, they want to highlight the deposit, each deposit that I receive in the bank, whether they are income or it's not income. So you have to underline each deposit and show that that deposit is tying up to the income statement of that quarter, which shows decline in the revenue by more than 25%. So these two important things are added. Now, they also say that if you are applying for a loan of more than $150,000, you would need all this documentation. If you're applying for less than $150,000, there might be a relaxation from the lender not to provide so much document. uh, you have to certify that you have all those documents, but they still will ask for like a bank statement or some kind of a financial statement for proving that you have the deduction. So it's important that we have to adapt to this rules and regulation of following this, how to prove this reduction. Now, in case of this is happens if there is a reduction in a quarterly. What happens if there is no reduction in the quarter, but reduction on the annual basis? So 2019 overall was higher than 2020 tax year by more than 25%. How do so in what will be document for highlighting that? In that case, you definitely need a 2019 tax return to be shown as a added. You have to drop that document, upload that document. Plus, for 2020, what they're saying is if you're not prepared the tax return, because of course the 1120S or 1120, 1065 partnership or S corporation or C corporation return is not prepared as yet, you can fill up that form and you can upload that form for 2020, and that will be a record for determining that your revenue has dropped by more than 25% 2020 as compared to 2019. Now, so those are the documentation part for business owners, for corporations who are in business in 2019 and business owner were in 2020. Now, what happens if you're not in regular, your business started in third quarter of 2019? So how do we prove that 20%, 25% reduction? What water you should take? So what they said is, if you have started business 2019, then any quarter of 2020 will compare to that any quarter of 2019, third quarter, fourth quarter, and see that decline in revenue by more than 25%. If you just started in fourth quarter 2019, then any quarter of 2020 will be compared to that fourth quarter of 2020 for determining whether you qualify for applying for PPP loan. What happens if you're not in business 2019? When for let's say you just started constructing something in 2019, your business was not in operation. Your business came in operation in 2020. So in what will happen in that case? In that case, any quarter of 2020, any quarter means second, third, fourth quarter of 2020 will be compared to the first quarter of 2020 for determining the reduction in this loan. So those important things came in with the SBA. Then it also came is with the SBA also provided guidelines for people like who are having S corporation and LLCs, which line to look into for how to calculate the PPP loan for those people, for second or for those business owners. So we have to look into your K1s. K1s, everybody should know that a K1 is a share of a member or shareholder from the partnership or LLC or the S corporation return. So that K1s, that's the line that says net earnings from self-employment tax on the K1 minus 179 deduction. That amount, if it's less than 100,000, you should take that amount. If it's more than $100,000, you should limit to $100,000. At that amount for each partner, and you can apply for PPP loan, provided you qualify, you meet that reduction revenue by more than 25%, and you don't have employees. In case you have employees, then you have to add that K1s, like we had the amount that we arrived at, and add for each employee. You have to look at the payroll summary by employee for the year 2019 or 2020. Remember, you can choose any period which is higher, 2019 or 2020. So if 2020 is higher, use 2020 payroll period. If 2019 is higher, use 2019 payroll period. But you should remember that you should not include any compensation paid to employee above $100,000. Let's say employee is making $120,000. You should, for computation purposes, you should include that the payroll only up to 100,000, not extra $20,000. So 100,000 should be added to the K1 for partners, for shareholders, for LLCs, and multiply by 2.5 times, and you'll give that amount. For sole proprietors, if you have employees or not employees, If you have no employees, again, it will be based on a Schedule C net profit from business. If it's more than 100,000, you limit to 100,000, divide by 12 into 2.5. If you have employees, you can likewise you can calculate for each employee more than or less than 100,000 multiplied by 2.5. If you are a business owner who owns a restaurant or who owns a hotel or motel with a code of 72, NAICS code of 72, then you have to multiply by 3.5 times, not 2.5. So you get one time extra for getting the loan amount for PPP loan for second draw. Now, if you're not applied in the first round of PPP, and this is the first time you're applying for this one, you can go ahead and apply under the same rules like I just said. So this is section I came in yesterday. Today, all the lenders have started processing applications. Again, the same thing happened. The same problem that we experienced in the first time when the first round of PPP came in the month of April. The website is not working. The uploading document is not working. All those things are there. But like I said, again, there are a lot of people who want to get this loan because this is first time for 2021 you're getting this kind of assistance. So so people are going into it. They are applying online. The website does not support all those things. So just be patient and keep trying and uploading document. Just follow the instruction that I just told you for documentation part. Be ready with the document. Take out your financial statement. Look at the financial statement per quarter wise, per year basis. Look at your tax return for 2019. Uh, uh, Look at your payroll summary for 2019 or 2020 and make sure that whatever is highest, you use that amount. Don't make mistakes on that amount. And remember one thing, don't include the contractor payments. A lot of people have used the contractor payment as a basis for uh, including in the getting the higher payroll. Contractor payments are not to be included, only the employee payroll. It's a payment, it's a paycheck protection program. It's not an expense protection program. So just be careful on that account.
So, Sanjivji, I have so many more questions actually. This year is a very interesting year, but I don't want to make this particular video segment any longer. So, I will skip those for the next video. We'll discuss more in details. For example, we're still getting a lot of people asking questions about starting business this year because this is a very interesting year. So, what track strategies they should apply? So, those are some of the questions. Then we have a lot of people who are moving. People are moving out of state, people are moving even out of country, so we need to talk about those people, what's happening with them. We got some questions about 401ks, like people who have left the country because of COVID, because they lost their H1 and other things and they move out of the country. How should they deal with their 401k plans? And then there's a whole concept about real estate going on. So many other things that people can look forward to, that I will ask Sanjeevji those questions. But what I do want to remind you is a couple of things. We have two webinars. That's right, two webinars coming up. Normally it's one. This time there's two webinars. So what we have done is for people who are in business, that means, and when I say business, it really means you have run a payroll. Well, let's make it very simple. If you ran a payroll last year in 2020, 2019, then that's a webinar for you. It's dedicated to PPP loans, where Sanjeevji will dig a lot deeper into what are the requirements, how should you use the fund, how should you apply for forgiveness, what should you watch out for. Because, I mean, many of us are collecting big loan amount, right? $100,000, $150,000, and you don't want to end up on a hook to pay that loan back. So you want to do all bunch of right things. So this is a great webinar. Once again, all our webinars are always absolutely free. That there's no charge, and at the end of the webinar, we do open it up for you to ask questions directly to Sanjeevji. And I'm saying that because many times we get phone calls in the office, people asking, "Hey, can I ask that one question?" When you call in the office, the right platform is set up a consultation appointment. It's $150. For those of you guys who don't know, you call the office, you say, "Hey, I would like to book a consultation appointment." $150. They will set you up with a specific time, and that is where you ask Sanjeevji your personal questions. If you want to ask a generic questions, then the best way to reach us is on our webinars and live events. That's where Sanjeevji is available to answer all of those questions. So that way, he doesn't have to pick up the phone every 30 minutes. You can imagine a lot of phone calls happening whole day long. He can't just be distracted whole day long. Otherwise, that would be difficult. So thank you so much, Sanjeevji, for dedicating your time to make these videos, letting people know about all the updates. And right now, it's a very weird time because people are sort of like writing this time off, like this is unproductive time. But the truth is, guys, business is still happening. The world is still moving. Opportunities are still out there. Those of you guys who have been thinking for years to start a business, this might be a good time. Why? Because you can find a lot of help. There are a lot of people out of job right now. They will be willing to help you. A lot of people are looking for job part time. They will be willing to help you. Real estate is cheaper, right? The rent is cheaper. You can find better deals on commercial real estate. And I can go on and on advantage. What I'm saying is, those of you guys who are writing this off, I would strongly request that you take a look at this year again. There might be an opportunity in here for you. All right. The second webinar that we have coming up, that one is going to be happening. So the PPP loan webinar is at the end of this month in January, and then we have another webinar coming up in February. That one is all about preparing for your last year tax return. So no, we're not going to tell you how to put your documents in a file. That's not the idea here. The idea here is what deductions to watch out for, what credits to look out for, what might have changed, where should you pay attention, so that way you can take advantage of the maximum possibility out there. Now, I know some of you guys do tax returns online. That's okay. We don't mind that. You can do your tax return online. These webinars are still available to you. They're still free to you. Come and you can still ask your questions to Sanjiv ji. We don't mind that at all. And we do that because I think sooner or later you'll realize that it's not worth doing them online yourself. It's better to let the professional handle it. And hopefully you will make more money and you'll get into business. You buy real estate, you'll start doing stocks, and you will need some extra help. So that's what we hope. We actually hope that you guys make more money and we help you save more money and help you grow your money. So that's the idea. So Sanjeevji, thank you so much for covering all the PPP details, and I will look forward to seeing you on PPP webinar next week. All right?
Thank you.
Thank you, Ji.